Hello everyone. So in this session we will be seeing one example for rectification of errors. Now here errors are detected before preparing trial balance. Let's see the example first. While scrutinizing and verifying books of accounts, following errors were located in the books of Rekha. First, wages paid for installation of machinery rupees 16,500 was posted to wages account. Repairs to machinery rupees 5,400 debited to machinery account. Own business material rupees 80,000 and wages 20,000 were used for construction of building. No adjustment was made in the books of accounts. Then fourth, furniture purchased from Mr. A rupees 5,000 was posted to purchase account as 500. Next, repairs paid for overhauling of second-hand machinery purchased rupees 1,20,000 was debited to repairs account. Total of sales return book rupees 35,000 was not posted to the ledger. Then old furniture sold to K Limited at its book value of rupees 2,000 was recorded through sales book. So all these are the errors that are being detected by in the books of Rekha, and these errors were detected before preparing a trial balance. So trial balance is not yet prepared. So now what we will do is we will record journal entries. Wherever we can record a proper journal entry affecting two ledger accounts, we will pass a journal entry and then post it in the respective ledger account. In the cases wherein we cannot pass a complete journal entry, we will post the partial entry on either debit or credit side of a particular ledger account. Now let's see all these transactions one by one. First, wages paid for installation of machinery rupees 16,500 was posted to wages account. Now here what has happened is wages was paid for installation of machinery. So whenever we install a machinery and whenever we purchase a machinery, the cost of the machinery will include its cost, then transportation plus the installation charges. So whatever is the cost incurred for the machinery till it is ready to use will be included in your cost of machinery. Now here wages paid for installation of machinery. The wages were paid for installation of machinery, but they were considered as your normal wages and they were posted to wages they were posted to wages account. So now here what we will do is, first what has happened is the journal entry which is posted in the books is wages account debit to say bank account. We'll assume that it is paid by bank 16,500. Now this is a wrong entry. Now what will be the reversal of this wrong entry? It will be bank account debit to wages account. Now what should have been the correct entry? The correct entry should have been machinery account debit to bank account. So the correct entry should be your machinery account debit 16,500 to bank account 16,500. Now this wrong entry is already been posted in the books. this should have been a correct entry. So what is the process? We will reverse the wrong entry and post the correct entry. So this is a reversal of wrong entry, bank account debit to wages account. So while passing a rectification entry, what we will do is we will pass a entry which has combined effect of these two, that is your reversal of wrong entry and passing of a correct entry. So here the bank account is debited and credited by 16,500, it gets cancelled. So your rectification entry will be machinery account debit 16,500 to wages account 16,500. So what has happened because of this is machinery account is debited by 16,500. So there is an addition in your machinery by 16,500, and in wages account we have reduced 16,500 since it is not a normal wages, so it is not considered as a normal expenses. Now if you look at this, this is known as a error of a principle, that is the journal entry is posted as an expense instead of an asset. So this is error of principle. Next, 2. Repairs to machinery rupees 5,400 debited to machinery account. Now, in this case what has happened is there were some repairs, normal repairs to a machinery. Okay, now these repairs are after the machine is started to use in the factory. So these repairs are after the machine is ready, put to the use in the factory. So now what has happened is there are normal repairs and maintenance expenses which are incurred on the fixed assets every year. So this is like a normal repairs to machinery rupees 5,400. But what has happened is this is debited to machinery account. Now after an asset is ready to use, all the repairs and maintenance expenses should be considered as your regular repairs and maintenance expenses. Only if there are some repairs and maintenance expenses which has increased the efficiency of the machinery. What do you mean by increase the efficiency of the machinery? Increase the efficiency of the machinery means it has increased the capacity of the production of the machinery, or it has increased the useful life of the machinery. Only in that case those repairs and maintenance expenses should be added to your cost of machinery. So these repairs are to the machinery, that is 5,400. Since nothing is mentioned, we assume that these repairs to the machinery are the normal repairs and maintenance. So this repairs to the machinery should be debited to your repairs and maintenance expenses. So instead of that, they are debited to machinery account. Now again, this is error of principle. So what we have to do is it has to be taken out from your machinery account and we have to add it to our repairs and maintenance expenses. Now let's see what will be the rectification entry for this. 2. So what was the entry passed? Entry passed was machinery account was debited and repairs and maintenance paid. So we will assume bank account to bank account. Now what will be the reversal of this wrong entry? Bank account debit to machinery account. Now what should have been the actual entry? The actual entry should have been repairs and maintenance expense account debit to bank account. Now we will pass a rectification entry by combining these two entries, that is effect of these two entries. So bank account debit here, bank account credit gets cancelled. So entry will be repairs and maintenance expense account debit to machinery account. So your rectification entry will be repairs and maintenance expense account debit to machinery account, and amount is 5,400. So what has happened because of this entry? Your repairs and maintenance expense has increased by 5,400, and we have taken out 5,400 from machinery. Next, 3. Own business material of rupees 80,000 and wages rupees 20,000 were used for construction of building. No adjustment was made in books. Now this is error of omission, that there is some material and wages which was used for construction of building. Now we assume that this construction of building is construction of building for factory or for office. Okay, so in that own business material and wages were used. Now this, what, when we construct a particular asset and we use certain business material or wages, so those expenses should not be considered as your regular expenses. These expenses should be added to your cost of that asset. So let's say for this construction of building, so we assume that it's a factory building or some building for the purpose of business. So now this is an asset. So whatever is the own business material and wages which were used for this building will be added to your cost of building. Now since nothing is given, we will assume that this own business material is included in your regular purchases, and this wages is included in your normal wages expenses. So we have to take it out from your regular purchases and wages, and we have to add it to your cost of building, or we have to add it to asset account. Now let's see the entry for this. Now what has happened is there were some old materials. So there were some materials, business materials, which were used for the construction of building, and there were some wages which were used for the construction of building. So we have to take it out from your purchases and wages, and we have to add it to the fixed asset. So the entry will be building account debit to your purchases account, amount is 80,000, to wages account 20,000, and the total is 1 lakh, which is debited to your building account. So we are assuming that those materials were purchased during the year and they are not in stock. So we have credited the purchases account, that is we have reduced those from your purchases. Then those wages which were used for building, we have reduced it from your regular wages expenses, and we have added to the cost of building. Now the next one. 4. Furniture purchased from Mr. A, rupees 5,000, was posted to the purchases account. So again this is an error of principle. There was some asset which was purchased, but it was considered as regular purchases. Again there is one more error here, that purchases, furniture purchase amount was 5,000, but only 500 was posted in the purchase account. So again there is a error of commission also, that is wrong amount is posted in the ledger account. So let's see how to pass a rectification entry for this. So fourth one. So what is the entry that has been passed? Entry that is passed is purchases account debit, and it is purchased from Mr. A. So A's account 500 rupees. So what is the reversal of this wrong entry? A's account debit 500 to purchases account 500. So what should have been the actual entry? It was a furniture purchase. So entry should have been your asset account debit, that is furniture account debit 5000 to A's account 5000. So for rectification entry, we will give a net impact of these two entries. So see, the entry will be your furniture account debit 5000, then A's account is debited by 500 and credited by 5000. So net is A's account should be credited by 4500. There is 500 debit and 5000 credit. So net impact is 4500 credit to your A's account. Then to purchases account 500. So the rectification entry will be furniture account debit 5000 to A's account 4500 to purchases account 500. So what has happened is we have taken out the purchases of 500 from your normal purchases. Then furniture account is debited by 5000. Now in earlier, even if the entry was wrong, the A's account was credited by 500. So but actual cost of furniture was 5000. So now the A's account is credited additionally by 4500. So now if you see the A's account, the total amount in A's account will be 4500 here and 500 here in the original entry. So it shows correctly that 5000 payable to Mr. A for purchase of furniture. Now the next one. Fifth, repairs paid for overhauling of second-hand machinery purchase rupees 1,20,000 was debited to repairs account. Again, this is an error of principle. Now there are repairs which were paid for second-hand machinery. When you say overhauling, it means it has increased some efficiency of the machinery. So when these repairs were paid for repairs of that second hand machinery, what is done is second hand machinery is purchased, then there are repairs which are done for second hand machinery, and then it is being brought to use in your factory or in your business. Now in this case, before the machinery is put to use in the business, these expenses are repairs are being incurred. Repair expenses are incurred on that machinery. Now this should be added to your machinery account and not to your repairs account. But instead what has happened is it has been debited to repairs account. So we have to take it out from your normal repairs and maintenance expenses and it should be added to the cost of machinery. Now let's pass the rectification entry for this. Fifth one. Now entry that is passed in the books is repairs and maintenance account debit, amount is 1,20,000 to bank account. We'll assume that they are paid by bank. The reversal of this entry is wrong entry is bank account debit 1,20,000 to repairs and maintenance account 1,20,000. Now the actual correct entry should have been your machinery account debit 1,20,000 to bank account 1,20,000. So now for rectification entry will give the net impact of these two. So the bank account debited, credited get cancelled. So the rectification entry is machinery account debit 1,20,000 to repairs and maintenance account 1,20,000. So now what has happened because of this is machinery account is debited. So there is addition to the machinery to the extent of 1,20,000, and repairs and maintenance account expense account we have reduced 1,20,000. Since that repairs and maintenance is not normal repairs and maintenance, it was for the second hand machinery that was purchased, and to increase its efficiency we have incurred this repairs and maintenance. So they are taken out from your normal repairs and maintenance expense account. Now the next one. Total of sales return book rupees 35,000 was not posted in the to the ledger. So what happens is the sales return book. So in this case what has happened is there is a sales return book. So all the sales returns are recorded in the book, and then the total is periodically transferred to the sales return ledger account. That is, journal entries passed periodically for this in the books of accounts, and they are posted to their respective ledger account. So what has happened is total of 35,000, it was not considered in the sales return book and it was not posted to the ledger account. Now what has happened because of this is the sales return account is showing a balance. Okay, it doesn't include a 35,000. So to that extent your sales return account is undercosted. So because of this 35,000, what has happened is the sales return account which is showing some balance that is less by 35,000. So we have to rectify this by posting an partial entry in your sales return account. But the other impact of this, that is in your debtors account, has been taken care. Only to the ledger not posted to the ledger means only to your sales return account this was not posted. So now let's see the impact of this. Now the sales return account will have a debit balance. Okay, all are your sales return. This normal entry for your sales return will be your sales return account debit to your debtors account. So your sales return account will have a debit balance. So now what has happened here is 35,000 total in the sales return day book. That 35,000 is not considered in your sales return account. So because of that, the normal balance of 35, normal debit balance which is reflected in the sales return account is less by 35,000. So on the debit side of sales return account, we will write to unrecorded total of sales return day book, and the amount is 35,000. Now this is a partial entry. There is no second effect of this entry. Since the second effect, that is the credit to your debtors account, has been already done, this is a partial entry. So on one effect, there will be only one effect on the debit side of sales return account. So this is an error of commission, wherein a total in your sales return book or day books is not considered, or your sales account, purchases account, sales return account, purchase return account are undercasted or overcasted. So in this case, usually there will be only partial entry. So we have to adjust this on directly to your sales account, purchase account, sales return account and purchase return account. So this was about your transaction number 6. Now the next one. Old furniture sold to K Limited at its book value of rupees 2000 was recorded through sales book. So there was some old furniture which was sold to K Limited at its book value, and it was recorded through sales book. That is, it has been considered as your normal sales. Again, this is an error of principle. Your sale of furniture, you have to credit it to your asset account. Instead of that, it has been considered as a normal sale. So now we have to take it out from your sale and we have to reduce it from the furniture account. Let's see the rectification entry for this. Now there is one more thing here. See, this has been told that it has been sold at a book value. That is, whatever was a WDV of that furniture, it is sold for the same value. So there is no profit or loss on the sale of furniture. So let's see this transaction. So the entry that has been passed is K Limited account debit 2000 and to sales account. Since it has been directly taken to your sales day book, it has been considered as a sales. Now the reversal of this wrong entry will be sales account debit to K Limited account 2000. The entry should have been K Limited account debit 2000 to furniture account 2000. So now the rectification entry will be combining these two entries. So your K Limited account debit and credit will get cancelled. So your rectification entry will be sales account debit 2000 to furniture account 2000. So now this has been, now here what has happened is we have taken it out from your sales by debiting the sales account, and it has been reduced from the furniture account since it's a sale of furniture. So this was about an examples wherein errors are detected before preparing a trial balance. So wherever possible, we have rectified this error by passing a rectification entry and giving effect to both the ledger accounts, and wherever the entry is not possible, we have to directly record it in the particular ledger, either on the debit side or credit side, depending on whatever is the case. Now, if you see here, there has been a lot of errors of principle wherein a particular asset is considered as an expense and particular expense is considered as an asset. So at the end of the year, when we calculate a depreciation amount, we have to consider this rectified entries for the purpose of depreciation. Now, since nothing is mentioned in the question, we can just write a note at the end of it saying that since nothing is mentioned about the depreciation on the machinery or building or on furniture, the same has not been calculated for this purpose. Otherwise, if the depreciation rate was given, then we will have to calculate whatever is the depreciation, because increase or decrease in the depreciation because of the rectification entry in that particular asset. So we have to calculate that also, and that needs to be, the entry for that also needs to be posted. Okay, so this was about the rectification of errors.